Most startups fail because of some form of co-founder misalignment or conflict.
Yeah.
Most people make the mistake of optimizing for, if I'm looking for a co-founder, the most trivial way is to look at skills. That's a wrong way to think about life, I think.
Where are you in life today as a person?
Where I am in life is, I think it's work in progress, and in a journey that's, I'm still a student of investing, a student of venture investing. I have had some success, but I feel like I've not reached the level of excellence that I aspire to. I hope that whatever we are doing creates impact, because that is very meaningful to me. Education spend, Edtech in India is not going away. I think people have got so, last 18 months got so, overreacted to what happened with Byju's. Spend is not going away. People are not going, if anything, with AI, etc., I think parents and learners are going to be even more worried about what happens to them. So I think anybody bearish on EdTech is missing that.
You recently also wrapped up the First AI Residency. What did you learn from this residency about how AI innovation is unfolding in India?
The learnings are many. Speed of iteration matters a lot more right now, and thinking about something from an AI native way, not just to say I'll append AI on something, but to say if I could start from scratch, anything, and you were to say you build it in an AI first way, what would that look like? Like the entire workflow would be different. So those are the kinds of founders we realized we want to back.
My guest today is Nitin Sharma, someone who's had a front row seat to how early stage investing in India has changed. Along the way, he's evolved his own approach to backing startups. Nitin's career in investing started with NEA in the US. He returned to work with venture capital firm Lightbox, experimented as a solo investor for a few years, and today leads the India platform for Antler, one of the world's largest day zero investors. In this conversation, we talk about what it means to invest before the idea is fully formed, why founder psychology matters as much as product, why venture capital needs to take real risk again, and how India's next wave of AI and deep tech founders may look very different from the last. This is a conversation about judgment, patience, ambition, and what investing on day zero demands. I'm Snigdha, and this is Unscripted. Welcome, Nitin, to Unscripted.
Great to be here.
So, are you happy with the way the year is ending?
I am. I think, like every year, it's a mixed bag, but I think we made some pretty significant strides this year. And without going into too much detail, I think the 4 things that we realized were all the work we did in AI, all the work we did to open doors for companies outside India with a very, very involved new program that I started. Third, all of the new sort of additions into the team that will help us scale. And 4, probably the most important, is we tripled the amount of money that our companies raised in follow-on rounds this year. So one of the things that really matters in pre-seed investing is ensuring enough companies are getting to the next stage. So we had 32 companies this year that raised further rounds, which was triple, and in amount it was triple the number of last year. So big year in that sense.
I will get into what's coming up for Antler in 2026 later, but before that, I wanted to sort of talk a little bit about you. Where are you in life today as a person?
I just had my birthday this past weekend, so I thought of this.
Happy birthday, belated.
Thank you.
Yeah. So are you more patient, wiser, something else?
Yeah. All of the above.
Okay.
I think. No, I mean, I think it's the same experience that a lot of people have talked about, right? You start looking at the big picture, you focus more on the present moment, you try to detach yourself from the results, you focus on the process of excellence.
Mm.
You take care of you value health more, you value relationships more. So where I am in life is I think it's work in progress, and in a journey that's, I'm still a student of investing, a student of venture investing.
Mm.
I have had some success, but I feel like I've not reached the level of excellence that I aspire to. And I hope that whatever we are doing creates impact, because that is very meaningful to me. And yeah, on the personal side, I mean, very blessed. The further you go in life, relationships, friendships,
Yeah.
start to see that values more than
Yeah.
pretty much anything else. So money's never meant that much to me. So spiritually more grounded, could
Okay.
definitely be healthier. So that's work in progress.
Okay. What kind of kid were you growing up? And what kind of India did you grow up in?
Yeah, interesting. So my dad worked for the government, a bank. So very typical middle class upbringing, and also the experience of living in different places, because his job took him to. Part of my childhood was in Bombay, but not Sobo, more the suburbs. So I'm that kid, and part of it was in Ludhiana actually, which is where my ancestral roots are. Um, and then I was 15. I left for Singapore on a
Mm.
scholarship that the government of
Mm.
Singapore and Singapore Airlines used to sponsor kids from India after grade 10. So, very normal middle class childhood. I was very much the quintessential nerd who was always trying to excel in school and was gobbling up general knowledge books and quizzing, and but also some early experiences with being a leader, and was head boy of school, so some of those formative experiences. But I think I really cared a lot about impact in India from a very early age. All I
Okay.
ever wanted to do from grade 4 was become an IAS officer.
Really? Oh,
Yeah,
okay.
I was reading these magazines in grade 4, which is very unhealthy, by the way, but
Mm.
that's a
Mm.
different point. And my entire mission at that point was to I didn't even care about engineering. I would need to go to IIT and then I become an IAS officer, right? So very
Mm.
sort of
Mm.
stereotypical in that sense. But when I went to Singapore, it literally changed and opened new horizons, because I realized there was this whole world out there, and I ended up realizing that I have very varied interests, and I was never going to be one dimensional, to only focus on engineering. I love philosophy. I love political science, etc. And so the US college system appealed a lot to me, because you could have
Mm.
that. So I never thought I would ever go to college in the States, because A, I wanted to focus on my path in India. B, I had no money. So it was almost never, everything that's happened in my life has been unplanned. So I've realized there's no point planning. I didn't think I would end up in Singapore. I My father kind of nudged me to do that. I didn't
Okay.
I didn't think I would go to college in the US. I didn't think I would start in mergers and acquisitions in San Francisco. I didn't think I would become a venture capitalist. I didn't think I would come back to India at the age I did. I didn't think I would go so early to do what I do today. So everything has been a process of
Yeah.
serendipity and discovery, I would say. But yeah, the US college years were a very, very formative part of my life. Probably my best years.
You mentioned earlier that you were actually looking at the civil services. So where did this this interest in public service, the interest in having making an impact at a social level, where did that come from?
Yeah, I think I was so. I think I think fairness matters a lot to me,
Okay.
and probably came naturally some level of when I saw. I think every kid has that experience, right, of growing up in India, and in the 90s, India was a very different place. So anytime I saw what seemed like injustice, or what seemed like people being denied opportunity, that really viscerally got to me as a kid.
Okay.
And so in that sort of, when you're a frog in the well, like the only way you see a way to make a difference is civil services. Right at that time, India was a very different place.
Yes.
I think today I would say that's probably one of the. I mean, it's not the greatest way to make a difference, frankly. Right? There are many other ways in which you can, which is what dawned on me much later. But I don't think in Snigdha there was any one experience I can remember. I think it was the entirety of childhood growing up in small town India, and feeling there was just inefficiency, corruption, injustice everywhere. Probably
Yeah,
also reinforced by my dad talking a lot about it.
about it. Yeah. So in at you went to USC, and over there, actually, apart from studying, you also taught
Yeah.
quite extensively. So was teaching also was like, again teaching something that you accidentally fell into?
USC is a school that's today a very top tier school, but
Mm.
at a certain point in the 90s, it was known as the University of Spoiled Children. They were in California. And the joke was somewhat factual in the sense it was a really expensive private school where, it was right next to Hollywood and Los Angeles, like billionaires. And so, you had a lot of very rich kids who went there. And I think I was probably the poorest kid to go to USC in the history of USC. That may not be too far from the truth. But, I just realized that the big part of my college experience, which I think makes the American system very unique, is how often you actually work while you in school. By the time I graduated, I had maybe 2.5 years of work experience. And so I just had to make ends meet. I paid for my entire education with scholarships, but still there was so many jobs I had to do. There were semesters when I was working in 4 jobs. And teaching actually happened because of that. Like I just needed a job. And so I started teaching math. And then I did it for a while, and to college, first, second years, actually second, third years in this course. So yeah, that was, and then I did that in grad school as well. And I really enjoyed that.
So you actually started your venture capital career with NEA in DC.
Yeah.
And one of the things you did there is that you developed a thesis for Edtech.
Yeah.
And that was in 2010. Was India part of the thesis at the time? And what's your assessment of why Edtech went sideways in India eventually?
Yeah, it's a great question. So, yeah, venture capital also happened accidentally to me, and now I've done it for about 15 years. And I think after going through the rites of passage for the first, let's say, 12 to 18 months of figuring out what I'm doing, I was encouraged to look at what the firm hadn't looked at. NEA was the biggest venture fund in the world at that time, 30-year history, but hadn't looked at education seriously. And there were good reasons for it. Sales cycles were long. Regulation was a huge problem. The way the education funding works in the US is very unique. Technology hadn't touched it. So you would not think venture capital would be a good fit. But, I felt a lot was changing. I started to follow some online education companies, and I started seeing the green shoots of that coming into K-12. EdTech was not a word. We would just call it education at that time. And for about a year, I did a lot of work. I met every single stakeholder, teacher, principals. I went to the first ever ASU GSV conference in a tent. Today, it's probably a big concert, but when it began, it was like 100 people who cared about education in a tent in Phoenix, Arizona. And so I really got very deep into it and tried to make our first investment, brought in a number of deals, and realized through lots of failure that it was the bar. Many of them didn't beat the bar. And finally, we invested in one company called EverFi, which I actually ended up working at also. But the reason that appealed to me was it was a giant part of the economy, right, alongside healthcare. And it just hadn't been touched by technology. And finally, with cloud at that time and mobile and social kind of coming together, you could see that it would really be disruptive. And of course, it has made a huge dent in the last 10 years. Whether you look at Coursera's or Duolingo's, and all of these companies, by the way, were NEA investments later. India was not part of my initial thesis. India, of course, very quickly would jump out as a very good market for edtech. To the second part of your question, I think the reason edtech hasn't worked as well as people thought it would is because most of edtech has neither been ed nor tech. And so you are not actually teaching, you're not delivering learning outcomes, and you're not actually using technology in a very robust way. When I mean, true personalization, something, these buzzwords, flipped classroom, personalization, adaptive learning, have been around for 30 years. The concepts are very powerful, but products have not actually delivered. It's a hard problem, right? I'm not saying people haven't tried, but I think in India, the challenge has been that most of it has gotten caught up in sort of the pushing of sales, and the way education is sold in India is just so related to outcomes, not the learning. And so when you combine all of that with alongside greed and opportunism, you get a space that was very broken. I actually think with AI, there's going to be it's my number one theme personally for me, not for Antler. To look at, I think AI could finally solve the things that have been very hard to solve. You could finally get what were the problems? Engagement, retention, monetization, right? I think AI could solve them in ways we haven't really explored yet. So I'm very bullish still. Education spend, EdTech in India is not going away. I think people have got so last 18 months got so overreacted to what happened with Byju's, etc. The spend is not going away, right? People are not going. If anything, with AI, etc., I think parents and learners are going to be even more worried about what happens to them. So I think anybody bearish on EdTech is missing that.
Okay. So let's get down to your journey in venture capital. You started with NEA, and then you came back to India, and then that part of the journey started with a fairly conventional early stage investing with Lightbox, to then going on to micro or angel investing, first principles, to now day zero investing, which is Antler. So walk me through this part of the journey.
Yeah. I think, like many people have said, you can only connect the dots looking back. I would say I've been driven by curiosity, impact, and sense of wanting autonomy and wanting to build something, which has really been the way these decisions have happened for me. I think, like you said, after Wharton, I came back, and everything I've done since in the last 12 months has had an entrepreneurial flavor. I think I'm not cut out to be a single product founder, unfortunately. Otherwise, I would have more impact in the world. But the next best thing, I guess, is to enable entrepreneurs, and I try to do that in a little bit of an entrepreneurial way. So the first journey, which obviously you are familiar with, is Lightbox. At that time, Sandeep was in the process of, we were in the process of transitioning from Sherpalo when I joined him to Lightbox, and the idea was to create a very unique model by acquiring the assets from Kleiner Perkins and Sherpalo, adding a new fund to do very concentrated portfolio strategy. And I really enjoyed that because I never worked in India at that point. And I really enjoyed that we went deep into fewer companies. So I learned a lot about influencing founders and companies without authority, right? And having the patience to work through some tough problems, and not just chasing the next hot investment. I think after that, I realized that my heart was closer to earlier stage. I also believed that I wanted to take a few more bets, and I also needed to be, for a multitude of reasons, in Bangalore. I just also prefer the weather here. And the filter coffee guys got me. So it's been 9 years in Bangalore now, and I'm very grateful. That Bangalore part, the first 4 years were first principles. Now, that was, again, very entrepreneurial. I didn't have a plan. I started to angel invest. I started to help founders. one thing led to another, and blockchain and Web3 is something I went into very early. So just like the US with Edtech, I think two or three things in India have been very, very early in that space. Sometimes naively too early, but I enjoy that. So, I just felt that blockchain and Web3, not the trading of Bitcoin, but the technology behind it could be game changing for India. I really believe that we could build the next pieces of the next internet from India. So I wrote a paper, probably the first paper in India on this, in terms of what regulation could enable startups, advised Niti Aayog, created a community of Ethereum developers, made a number of investments. So the point is, first principles kind of just grew organically with some experimentation over 4 years. And then I also, when the RBI regulations made it hard to scale anything in India, I didn't want to do anything. I'm, coming from the background I come from with my dad, a government servant, I was not going to take any risks with regulation. And so I said, okay, well, we'll just continue to invest in other things. So that's how Kutum, Third Wave Coffee, Mudrex, a bunch of other good investments happened. But First Principles was really a small, like solo GP operation with the idea of being very thesis driven and going into completely new ideas early. And I love that journey. I think we ended up backing some very amazing founders, but I also realized the limits of it because I felt you were one more party on the cap table. And often I was spending a lot more time on each situation and realized that after 30, 40 companies, I can't scale myself. So I realized and I didn't think I was actually solving an important problem. So that's where Antler happened because again, driven by the, impact, curiosity. I think in 2020, Rajiv and I and Antler spent most 6-7 months, in wearing masks in third wave cafes, talking about the opportunity to create an institution in India which is focused on day zero. There was no one institutionally, globally, and institutionally focused on day zero as the starting point, and asking the question, how do you create a platform which has products? And those products could look like the products would solve some problem. So a product could be a co-founder matching product, could be global expansion, right? And so we thought of these problem sets and we said we could create a platform. And Antler was growing very, very rapidly. So it made sense to build that in India. So that's how that journey happened. Work in progress. I think people ask us sometimes, are you trying to be, or are you the YC of India? I don't think that's how we think about. We respect YC a lot. I think what they've accomplished is phenomenal. I think we go earlier in stage often, and we are very decentralized. Right, each Antler fund is a very homegrown operation, and we also are not just investors in that, where we are a pre-seed fund that is choosing to go early rather than any kind of accelerator or incubator, right? What I think we are trying to do is to have a much longer partnership with companies over many years. So day zero, but day zero to greatness.
What is it that you saw in the market that convinced you that India needs this kind of a platform?
So I think three things. One, in my journey with First Principles also, right, I realized that the process of ideation, it's still very inefficient, right? And so what happens? So of course, some people start with a very clear idea and a very clear co-founder. More power to them. But a lot of great people, right? If you take the view that a society becomes better when more of its amazing talent becomes entrepreneurial, right? Like I feel like if quote unquote, the strongest, passionate people did two things, public service and entrepreneurship, the country will prosper. So I can't solve public service. I think making more amazing people take that step of becoming an entrepreneur. So many of them do, but they take a while, or many of them give up. Why do they give up? They give up because sometimes there isn't the intense community that they have, or they may be from an underserved market. Many women go through this pain of not finding that environment, right? Small city students. Sometimes it's despite your best effort, you don't find the right co-founder, right? So there are 4 or 5 problems that I think kept coming up in my conversations when I was talking to people who were looking at starting up, and they do get solved. Don't get me wrong, but you can do much better, right? You can accelerate that process. You can add intensity and um, thoughtfulness to that process. The second thing I think that became clear was that if we could create this platform and scale it, right, that something like this could scale, which is very hard to do in a typical venture strategy because you're too tied to one person or one vintage or one fund, etc. And we felt that that scale could have a lot of impact. And the third thing that became clear to me more from an investor hat is that if you make it work, it's like the highest risk, highest reward strategy. Venture itself is very risky. Early stage venture is very, very risky. This takes it even higher in a way because you're doing a lot of hard work very, very early. But that is also where the alpha is. I think the best opportunity I felt for me at that time was find a way to get amazing people to partner with you before they have figured out their details, because they will figure out those details. But if you are the first believer while they're refining their idea or they're looking to complete their team or they're really interested in going global from day one, for all these reasons, you could partner with them. And that would create, and also because you do it programmatically, you put a lot of structure to things which are unstructured otherwise. Right? So LPs love that. They love that. Otherwise, early stage investing seems very chaotic. What is the logic? You decide on one call. We put a structure to it, like with the residency program, the way we evaluate. And so if you standardize, put structure and scale, then the alpha you could get from an investment perspective could be quite significant. Now, it's a long journey though. So it's going to take a few years to play that out fully.
Yeah. So what was day zero like at Antler?
Rajiv and Rajiv jumped on board in June of 2020. I had my first principal's responsibilities. So we kept talking and jumped early 21. It's been 5 years. Day zero was COVID was still raging. So one of the challenges was if you want to do this in a way that's cohort based, you couldn't run physical cohorts. So we did a digital one with, and we thought we would start working with solo founders. But at that time, again, because of COVID, you could not connect people from easily. So for the first year, we focused on the teams that had just gotten started. We didn't venture into anything with solo founders. But the day zero was very exciting, and there was basically a lot of young energy. We had 6 people in the first year, and we still managed to, I think, work with maybe something like, if I remember correctly, almost 10,000 applications. And the start of the fund. So, starting a fund is a huge amount of work which people don't realize, from not just the initial team and the investment activity, but also back-end work of compliance and filing and getting permissions, etc., etc. So the first year was just a lot of that.
Okay. So you alluded to Y Combinator earlier. And, the comparison is inevitable, right, in some ways. But what is the one principle that you think differentiates Antler from YC?
So, as I said, I think anybody who has tried to copy YC will fail. And that's because YC has succeeded, and I've thought a lot about this. YC has succeeded partly because it met an important market need at a certain time and with a certain very unique group of people. And even for YC, people don't realize it probably took 6 to 7 years for them to break out. And so I think the question to ask is, what does the world need today, and work to solve that first principles rather than take any template, right? In fact, anybody who's tried to copy hasn't really worked out. We actually don't even think that we necessarily compete. There are different founders at different stages that both can be a good fit for. We've had founders who done Antler and YC. So, um, but if I have to say, if I have to answer your question, I would say I think YC started in 2005 and solved the problem really well, uh, in a way that's works really beautifully. It's centralized, right? There's one YC. Antler is the opposite in the sense it's very decentralized. So we are going earlier than YC would. In a typical case, we are also very decentralized because each country has differences in terms of what's right for the market. We are trying to do this in a way that the teams are there on the ground in each country, helping the founder day to day as they're getting off the ground and starting a business. And also the way the partnership hence works is very decentralized. So each of us is an employee, but we are also owners in a sense of what we are creating in each country.
So if you were to walk me through the residency, like I'm a founder, what happens in week one that doesn't happen anywhere else in India?
So I don't know what everybody else does, but I think I think what we've realized is that there is no dearth of gyan in the market. There's nothing that you want to work with A+ people, right? And A+ people they don't need you to tell them basic stuff, right? So a lot of the times things start with, the way I look at life is your mindset leads to sort of the substance of the content that you value, and then there's this content on style. So there's a lot of content on what I call style, which is how to pitch, how to hire, blah blah blah, right? There's a lot of content on what I would call like substance also, which is how to build businesses, how to build products. I think there are better people than us who do that. We also do a lot of that, but there's no dearth of that content. We focus in week one on the mindset. Okay. So go deeper in the mindset and ask what are the 2 or 3 most important things that have to be psychologically understood before you start a journey. The first thing is the why. Most people are unclear about why they're actually doing a business or a venture-backed startup. Whatever I'm saying is in the context of VC-backed, not generally we are talking about entrepreneurship.
Yeah.
So I think it's become a little fashionable. It's become something which a lot of people don't internalize how tough this is going to be. So if you don't know your why really well, it will translate to everything else. So we try to focus on really making the person clear about the why. Like, could be defining, where your motivation comes from. Why would you do this for 10 years? And so on. The second thing is the who of, the co-founder and the team you built. Most startups fail because of some form of co-founder misalignment or conflict. Yeah. Most people make the mistake of optimizing for, if I'm looking for a co-founder, the most trivial way is to look at skills. I am a business guy, that person is a full stack engineer, maybe we'll partner, right? So our skills are complementary. That's a wrong way to think about life. I think you have to not just look at skills, then the next level is to look at vision and but there also people sometimes mistake that what you really have to look at is values. We spend a lot of time making people understand what you need in a co-founder, like based on your values, right? So the third thing is the how, which is really asking the question, are you building something that will be venture scalable? And are you the kind of founder who is venture scalable? So I spend most of my effort on that question, which is because I think Rajiv does a lot of the second part, the who. I think there is a huge gap, despite all the content out there. There's a huge gap in making founders ask or understand rather what the math of the VC is.
Yeah.
And why? And the media has actually done a bit of a disservice here, because you see so much media coverage of any funding. The perception that's been formed is, if you're a VC backed startup, you're successful. If you're not VC backed, you're not that cool, not that unsuccessful.
Correct.
But
Yeah.
nothing could be further than the truth.
Yeah.
Farther than the truth, rather, right? It's not at all. It's just fuel. Different fuels work for different journeys. So a lot of what I do is to make them understand whether this is even the right fuel for you. So de-glamorize venture. Just ask, is this the right fuel for the kind of idea you are pursuing? Which goes into the conversation of, can you be a non-linear growth business?
Yeah.
Can you see can this idea or this plan lead to a large outcome potentially in 5 to 7 years? And are you then up for the challenge of climbing that non-linearly? What does it mean for you as a founder? Are you a learning machine? Are you someone who can take that kind of stress? Are you in that mindset of not of breaking through walls if you have to? So I think a lot of that is where we spend the first week. Then it goes into more sort of tactical things.
Okay. So it's really more of a at this stage, it's really a bet on the person, on the individual, and a lot of what you do sounds a lot like psychology, actually. So
Yes, it is actually. But isn't all life ultimately?
yeah,
all,
that's
all
true.
all sales, all leadership, everything is all product. So yeah, I think psychology should be like required courses.
The fact that you spend so much time just understanding what the person is all about and making sure that you're betting on the right, was that always part of the plan, or is this something that you realized has
Yeah.
to be?
No, so we do. I mean, I answered the question about week one, right, which is where much of this happens. But in a residency, which is, and we make quick decisions also, right? We make decisions in a few weeks. We obviously have spent a lot of time on many other things. Like, we go quite deep into product walkthroughs, product vision. We go very deep into sort of understanding of markets. So we actually do a lot of the conventional VC work also. I think we spend more time on this. And the idea is, yes, all investing is investing in an asset. Asset that you're investing in at day zero is not a business plan. It's not a product. It's the mind of the founder. So what you're really investing in is, will the mind of that founder grow? That's going to determine who they attract, how they solve the customer's problem, can they scale, right? So I think it's very important to start with that as the foundation.
So I want to jump a little bit to Embark. I think the last time we spoke, you talked about, I think you just come back from the US, and my question is, what did you learn from spending 3-4 months in the US that changed or reinforced how you think about Indian founders going global?
Yeah, it's a question that's become quite close to my heart. I've spent half my adult life in the US and half in India. So personally, I think about this quite a lot. I think one other point before I answer this is what makes Antler different or unique. And I forgot to mention, one of the other pillars, right, was being the best partner for someone just starting out with a very global ambition. At later stages, you have fantastic investors who have global networks, but at very early stage, we think we have a really big network that founders can tap into. Antler has offices in 30 countries now, 1.4 billion under management. So one of the things we want to do over time is, for any founder in India, on day zero, being able to tap into, for employees, advisors, investors, knowledge, tap into this very vast global network. No matter what you're building, we can connect you to 10 people who can be helpful globally. So now coming back to Embark, so it was a response to our founders asking us for more help on this topic. And with AI, the last couple of years become even more important. There is an epicenter effect right now. Every technology shift, there is this epicenter effect. For the first few years after that happens, you want to be close to the epicenter. the density and the intensity that you can benefit from is quite real. So it's sad that there has been this mini brain drain in the last 2 years. A lot of really strong AI native founders have moved to the US. Unfortunate, but here we are. So what we created Embark for was to solve GTM, not fundraising, because once you solve, but if you can get traction in the US, capital is not an issue. So we focused on solving for GTM and traction. So the idea is we fund people very early if they are truly thinking about a global product. Could be consumer or enterprise, mostly enterprise, of course. We want to create the best experience for you to land in the US very quickly and find traction in the US. Even for strong founders, in the past, it's taken 12 to 18 months and a lot of mistakes, even for experienced founders. We want to compress that to 3 to 6 months and you find traction in the US. How do we do that? And what the lessons are to your question. So we did 95 sessions this year, just this year, for 2 different groups we took. 95 interactions with founders, operators, and a few investors who've gone through this journey, mostly the diaspora folks. And so some patterns come out. And we put that together in sort of 12 points. I won't go through 12 in the interest of time, but I'll give you, a few samples. So I think one is whatever created your PMF in India, it does not translate to the US. It seems obvious, but people miss it. I think narrowness of ICP. In India, I call this the driving in on the road. I draw that parallel. We don't follow lanes. So basically, we don't stick to one type of customer. In India rewards sort of breadth in a way. Like companies very quickly are trying to go after 6 different types of customers. The US is the opposite. People prefer depth. So if you're a founder who picks a very, very narrow definition of customer and goes very deep and solves that problem, people respect that more. And that's the right way to get more traction in the US because the market's very, very broad and deep. But it's a mindset shift for founders to develop that muscle, that discipline of saying no to, of saying I'll be very focused on, it's not just I serve financial institutions. No, you have to be down to the level of I have figured out I want to go after credit unions, which are between 500 million and 1 billion in size and have X number of people in their customer service department. And I will sell a vertical AI agent to those for the first 6 months or first 9 months, right? Like that's the level of thinking and granularity. I think apart from many of these sort of tactical things, mindset wise, obviously this is cliched, but no one cares if you talk small. In India, a company getting 1-2 million of software revenue is something, right? No one even cares if so the size of your ambition. I think people forget that in the Bay Area especially, people are very high on the Maslow's hierarchy. Everybody has made good amount of money. Or at least there are lots of people who have made too much money. So you going to them and presenting an idea as either for them as a customer or as an investor, which is incremental, is not going to go anywhere. But what people are looking for is to sort of add meaning to their lives by thinking of what is the next big disruption, right? What is the next $1 trillion company? So I think that's very hard for a lot of founders who've not been exposed to that, to go into that mindset, right? Then the way you build relationships is very, very different. I think most Indian founders struggle with that. They end up having a really hard time, of course, going outside the diaspora to build good relationships. But the US just rewards authenticity and curiosity and interestingness in a different way, right? You don't have to be transactional. You should just be very interesting. So I know not we spend so much time on this, but those are some of the things that come out.
Okay. The last one, I think that's actually a lot of it is because it's a cultural thing. It's how we are brought up.
I think all of this is like middle class conditioning that all of us have grown up with, right? So I think it's not rocket science. Just takes exposure to, uh, you know, if you're open minded, in a few years you will figure this out. But as a founder, you don't have a few years to figure it out. So you have to grow that business very quickly. So that's why it's a very accelerated journey.
You recently also wrapped up the first AI residency
Yeah.
in India. One is this the first time you've done a domain specific residency? And what did you learn from this residency about how AI innovation is unfolding in India?
Yeah, no, great question. Yes, it was the first. We we were expecting about 1,000 applications. We got 2,500. We picked 1% of them. They came in. We doubled our check, 500K up given up front, and for the ones we fund, and we halved the time. So we decided in more like a month. Um, we really tried to focus on, there's AI enabled and there's AI first and truly AI native. So we try to really focus on founders who are thinking in a very AI native way and an AI first way. We made 6 investments so far out of this residency, ranging from dating, which is a very broken space, to a team of and 15-year-old, 18-year-old, and a 19-year-old. One of them from Kashmir, who who have actually shown metrics that are beating DeepSeek. So we're seeing some amazing talent come out of India, and to another couple which are in areas like an AI cooking assistant and one that's trying to sort of make the experience of Shopify sellers or WooCommerce sellers better, right? So we found some very interesting AI native, AI first founders. I think the learnings are many. Speed of iteration matters a lot more right now. So we are over indexing on founders who are just iterating much faster. I think even the good thing is you don't need the old template of like a business founder, technical founder. You don't even need a large founding team to get started. You can delay some of the hiring because AI is doing so much for you. But that also has meant that the business, quote unquote, the business founder also has to be very hands-on, also has to be very technical and if not technical, just insanely curious to dive deep. So I think those are the types of founders, and of course, ambition and thinking about something from an AI native way, not just to say I'll append AI on something, but to say if I could start from scratch, anything, and you were to say you build it in an AI first way, what would that look like? Like the entire workflow would be different. So those are the kinds of founders we realized we want to back. And then the last thing I would say is just, the question of what are the moats keeps coming up because it's so hard to see, right? It's so hard for anyone to see right now. But I think founders who are thinking about distribution earlier in their journey with some sophistication, we've spent quite a bit of time with Emergent, Mukund, that Emergent. I mean, how they've grown so quickly. So Indian founders and India-based founders are killing it, right? You just have to have that mindset of iterating fast, thinking AI first, and viewing distribution as a mode.
Okay. So you've done 9 residencies so far, correct? So what's the typical conversion rate per residency into actual deals?
So we start with no such number in mind because we want to fund anyone who we believe meets or we align with, right? I don't even want to say the bar because we are wrong all the time. I also think that there are many of the founders we don't fund but get funded elsewhere. That's also happened, and we are very happy for them. In general, one out of 3 to 1 out of 5 is probably where things have been in the past.
Okay. So I want to ask you a question, which is that, Antler, you said, I think in our last conversation, you said is the opposite of spray and pray.
Hmm.
So let me play the skeptic.
Sure.
Why is 100 company portfolio not spray and pray?
It's a great question. Because a 100 company portfolio developed over 5 years
Okay.
with a team of 15 to 20 people
Hmm.
uh, does not feel like spray and pray to me, uh, compared to the idea that, as an angel or as micro VC, you often do many more per year per person.
Okay.
So that's one, is that if you put it in context of team size and the investment base, we
Hmm.
probably do like 20 to 25 a year,
Hmm.
which is not spray and pray. If you look at the denominator, we have crossed 75,000 applications.
Okay.
So I think we would like to think it's very, very selective, like 100 out of 75,000. So generally between every year, it's been between like 1 in 500 to 1 in 1,000. So I think in
Hmm.
that sense, again, I would say it's not spray and pray. But the main reason I would say it's not spray and pray is because of the time we spend per company and because
Hmm.
of the residency method. Uh, we make some investments outside of residency, but most of our investments are through the residency.
Okay.
In a typical residency, even the fast track AI one, we have spent on average about a month,
Hmm.
but in the past, almost 3 months uh, working with the founder. So, spray and pray is when I think you hear the pitch, you like something, you invest, or your friends are investing, so you invest, or
Hmm.
you just don't really study the founder or the thesis that deeply. And so, you don't
Okay.
understand the business, but you just like something, you surface level, you invest.
Hmm.
I think if you spend 1 month to 3 months day working in our office with the team, you really get to know them.
Hmm.
You really get to know them inside out, and you might be wrong about some things. Some you may see the market wrong, but you're much better informed about the main asset, which is the founder, the founding team,
Hmm.
and also that gives us a long time to study the market.
Okay.
So I think we are making fairly high conviction bets. You also need that level of diversification at this stage.
Hmm.
But in the future, we may make it slightly less diversified. Also, that's
Okay.
also just how we improve our processes.
Okay. And what has been the portfolio success rate so far in terms of raising follow on capital?
Yeah. So about 53 of, let's just say, half of our companies, we look at the 1 year mark.
Hmm.
At the 1 year mark, have they moved to the next stage, raise for the capital? About half of them have.
Hmm.
The other half are not dead. They are taking a little bit longer.
Okay.
Uh, the loss ratio is quite low, much lower than we expected. But that's not the most important thing. I think the most important thing is just how many of these companies break out into massive successes. We have seen Series B led by Axel. We've seen 3 or 4 Series A's this year. So I think we are seeing that momentum. As I was mentioning to you in the beginning, this year was the year that the portfolio started to mature to a point where 32 companies raised money, and that was triple the amount in total of last year. So I think we are feeling good about this right now.
Okay. So you raised 75 million for your first India fund. I think that was in 2024. Are you mostly deployed, and when do you think you will need to raise a new fund?
So next year, I think we will definitely start that process. We are uh, we are maybe like 80% or so deployed on the first checks,
Okay.
but we
Okay.
also have a lot of or like we have a fair bit of reserve capital for double down on the companies in Series A, etc.
I wanted to understand, given how much you've been doing in the last, over the last few residencies, do you think you will need a bigger fund compared to Fund One?
We haven't made decisions on this yet. My hunch is definitely a bigger fund, but the idea is not to increase the number of companies we fund by
Yeah.
some crazy multiple or anything like that. I think we'll. I think the question is, we've still run more of this. I mean, while we are a very national operation in a way, because we get found, some 75,000 applications from all over India. We are not close to the ground in many places, including Delhi, NCR, etc. So there is an argument that we could expand
Yeah.
by cities, and that could mean far more in terms of the number of companies and the fund size we can deploy. But my hunch right now is that most of what we want to grow into in terms of capital size is to improve the follow-on capital for companies, maybe even increase check size, and just have more capital to support companies for longer,
Okay.
rather than just fund more companies.
So globally, Antler invests in mature startups as well through the Elevate Fund,
Yeah, you did all your
right?
research
So,
well. Yes, so we have.
Lovable is part of that portfolio, right? So, have you invested from Elevate in India?
Yeah, it's a great question. So, for those less familiar, Antler has 14 or so, I think, geographic funds,
Yeah.
which again, people like me and my peers have sort of set up, run on the ground. We are all connected as part of Antler in the same platform. Antler brings an insane number of capital relationships to help various funds grow. We also have set up a separate fund of funds called Global Access Fund that
Okay.
centrally pools capital for funds. And we also have Atlas Elevate that you mentioned, the continuity fund, which is to support companies from our local funds that get to Series A's, B's, C's, write checks between 1 and 10 million, co-invest, not lead. And so it's largely meant for continuity. And in some cases, they can do
Okay.
investment outside of Antler as well.
Okay.
So that's a $300 million fund, which we have deployed in the last 3 years or so. Yes, some of it has come to India. More will in the next year or so. Namaya 3, we invested from Elevate, and there are two other companies, Logix and Juno, where Atler Elevate also came in uh, with sizable checks.
So when you invest from Elevate versus the inception stage checks that you write, uh, how does the way how you pick the companies, how do you decide that for Elevate? Like how does it
Yeah,
differ?
so it's a separate fund with a separate
Yeah.
IC, separate team. So that decision making is independent of what the local
Yeah.
fund is.
Yeah.
We collaborate, of course, and we were able to sort of bring a lot more color from the local market and the conviction we have with certain companies more than others. That comes in the process, but the decision making is a separate team. So that
Okay.
solves the problem.
Okay. Okay. Finally, the next residency comes up in January.
Yeah, we will be announcing something in January. Yes.
Okay. What are you hoping to find in the market? What are you hoping to back? What kind of founders are you hoping to see when you go into your next residency?
I think we've learned a lot from both the current AI residency, Embark. Um, I think our Jan residency will be very much a second part of the same. So, uh, as I was mentioning earlier, I think founders who, whether you're trying to solve a problem in India or thinking globally, more ambitious problem statements, um, more sort of AI first thinking, and those probably are the two most important things we want to look for. I think then there is also a question of where the market is in India. I think you asked something about this earlier. Look, we missed the boat on foundation models, infra, and now it's going to be about applications and services. That could also be India's opportunity, and especially that services part, which is a lot of people are thinking about right now. So I think my hunch is that for the last couple of years, we were very much a laggard. The next 2 or 3 years, while it may not be the best outcome for us because a lot of the value creation happened lower in the stack on the open AIs of the world and Anthropics of the world, but I think application level companies will also be very large, and maybe that's where we will see that inflection, maybe 26, 27, where India starts to produce a lot of those winners. That's my hope. And so we hope to be seeding those ventures in the next few residencies. I think I was talking to someone, I was giving a talk on what's changed in the last 2 or 3 years. So what I did is I looked at this December 23, December 24, December 25. And I said, let me look at the three investments, most recent three investments in each year, right? And what's changing. Now, we are just one of the barometers in the country. I'm not saying that we see everything, but in 2023, I think we were very excited about things like AI in fashion or legal AI. The last three investments, if I look at 25, and we didn't plan it or anything, right? It's somebody who's come back to build an Airbus in India, somebody who's come back from the US to build advanced jet engines in India, because there are only 3 countries or 4 countries in the world that can claim that, and somebody who wants to build an alternative gene editing like CRISPR from India. So these are the last 3 investments that we've done this year, and so I feel like something is really exciting right now, which is finally you have true R&D, science-based, founders, just young founders thinking far more boldly, right? So I think it's both of these things are interesting, right? Like the deep tech kind of stuff, which is finally we have critical mass, we have much more funding from the government, we have much more ambition. A lot of that talent moving back, whether it's in biospace, defense, and on the other hand, with AI, we finally will see maybe not the most value add, not the biggest $1 trillion outcomes, because that seems to have happened in Silicon Valley, but at least many successful application and services level companies, which we haven't seen in the last 2 years. But I think the next 2 or 3 years is when that starts to play out.
I think to end, all of this needs capital, and I can't but ask, what is, to your mind, what's the venture-shaped bet that investors are still reluctant to make with respect to AI?
Yeah. So I could as an investor find faults in larger investors and say, why haven't they funded $100 million checks for the foundation model layer in India?
This is not about pointing fingers.
No. I'm saying that that comes up often, right? And I don't blame them at all. I think they have made the best decisions with their current strategy. I think as an ecosystem, we obviously have lost out. And when you hear stats like all of India has maybe 70,000 GPUs right now, and Meta itself has 2 million, or you see just how much talent has flown. And I see so many. I go to San Francisco for a few months this year, and I meet so many more Indian AI founders there than I meet here, which is ironic. Or the fact that every Indian fund is going there to fund these founders there after a demo day. It's sad. But I think what hasn't happened, it's less about like why haven't people written these large checks, because these are very large capex intensive. In general, I think I think I mentioned this once earlier when we spoke. Reason venture hasn't produced in consistently high venture type returns. I mean, you're seeing with Peak and a few others. Axel, of course, has done really well. Seen some funds have done that repeatedly, but largely the asset class has not. Is because the reason venture returns haven't happened is because venture risk hasn't been taken, and you cannot have one versus the other. So for a long time, in the first decade or so after I came back, I actually didn't think that there were many true venture type risks taken. I think in a small way, we are trying to be one of those people to do that, true venture risk when things are unclear. I think we ask, as investors, we ask for too much information and too much consensus viewing and too much traction. We forget that that's not what VC is about, right? People overpay for a little bit of traction, which doesn't mean anything, but they don't take a risk on someone just before that traction, which actually means a lot. So that mindset shift is still, but I feel it's slightly shifting now with deep tech and some of the things we discussed earlier. So we will always be behind Silicon Valley by far, but we still have a huge. That's just not the right comparison. I think this is Indian VC is its own flavor, and the main thing is to find the right timelines and capital structures. Perhaps India needs longer funds. Maybe we need 15-year funds, not 10-year funds. Maybe we need a different portfolio construction, right? Maybe we need to think about ownership slightly differently. So we've just aped Silicon Valley math onto India, which is just not going to work very well for the most part. So this is a much longer discussion, but those are my quick thoughts.
Absolutely. Thank you so much, Nitin. That was really interesting, and I hope that we'll be talking again soon.
I hope so too. Thank you. This was fun.
Thank you.
Bye.
Bye.